Hey, what's up, you guys? Paulo Brands, Clear to Close Brokers. Happy Friday. Hey, if your family celebrates Easter, happy Easter. If your family does not celebrate Easter, I hope you have a wonderful weekend. If you're looking at houses this weekend, we're not working together. We really should. I would love to give you a second opinion and see if I can, well, not see if I can, see how much. You see what I did there? How much I can save you on your purchase in terms of interest rates or fees. Would love to be a part of your plan. Now, if you're a family out there that's always wanted to buy a home, there's a QR code. It's right there or there. It always messes me up. I want to say that, but in the video, my hand's over here. There's a QR code there that leads directly to my calendar. It's called a hopes and dreams conversation. We don't pull any credit. We don't collect documents. There's no obligations. It's just me and you. Utilize my 20 years of experience helping families buy homes. We'll put a plan in place for you to help you save money, get your credit score better if that's what's necessary. Just trust me, it'll be worth your 20 minutes and we'll put a great plan in place for you. Now, as it relates to rates, remember at the end of each video, I give away, whether it be lower fees for the week, a free appraisal, lower interest rates, because I want to make buying a home more affordable for you. So I'm going to tell you what that is at the end of this video. You just have to wait and see. But until then, just take a look at the interest rates. Interest rates are doing really well right now. Now, those rates that you're seeing down there are with 1 point in cost. That's roughly 1% of your loan amount. Of course, there's no point options available to you, but we're starting to see people become more and more interested in buying points, especially in this market as people's fear is driving them to the sideline. Some houses have less and less competition, where the sellers are, really pitching in and paying for their loan costs. We just had a seller pitch in, I think it was $20,000 to $25,000 for closing costs. This client was able to get all of his fees paid for by his interest rate down. It was just such a huge win for them. Now, this doesn't happen when interest rates start really hitting that low sixes, upper fives. I'm really referring to conventional and jumbo when I refer to that, because it sparks more competition and it becomes more of a seller's market. And I'm not suggesting that we're not in a seller's market, but it becomes more of a seller's market where they may not have to pay your expenses or your fees to get to sell their house because more people want it. So take this opportunity. It's a great time to buy, especially when rates are like that. It's absolutely insane. Let's talk a little bit about what happened this weekend. We started off this week regarding U.S. concerns after Janet Yellen warned that investors might be shying away from this dollar-based asset. There was a lot of things that happened, especially last week. We saw the 10-year Treasury go down. We saw bond prices go down. We saw the stock market go down. Then we see the 10-year Treasury shoot up, and we saw the dollar go down, and it created a lot of chaos in the market. But when you take a step back and you get out of the dust and you take a look at the data, let me give you some statistics here. So foreign demand from U.S. bonds is still at a record high. So we're not in any jeopardy of that piece. So while the dollar did take a dip, which it clearly did, it's still way too soon to panic. In fact, 50% of global transactions are still done only in U.S. dollars compared to 89% of where the global transactions have the U.S. dollar on one side. Make no mistake, the U.S. dollar is doing very well. It's not a concern, or we shouldn't be panicked about it. It's something that should definitely be watched, but we're not at that panic zone yet. And so let's just, as my Uncle Phil would say, let's not get it twisted, okay? Economically, industrial production came in much lower than expected, which is a concern for a recession, indicator of a recession. But with that said, recessions, as we've talked about on this little program or whatever you want to call it, many times interest rates and housing prices do extremely well in recessions. In fact, out of the last 8 out of 9 recessions, housing prices have actually stayed steady or increased, whereas only in one did it decrease, and that was in the 2008 housing crisis. But remember, the key difference is the housing crisis created the recession. The recession did not create the housing crisis. So that's a really important key fact to remember when thinking about whether buying a house during a recession is a good idea. Interest rates, however, have definitely gone down. That's how they spark the economy. And like people that are taking advantage of today, when people are sitting on the sidelines getting their closing costs paid for, but maybe taking a higher interest rate, they're going to really benefit when interest rates start going down if we, in fact, hit a recession. Now, on the flip side, when you take a look at retail sales, very strong. Now they look at retail sales because more people are spending, right? There's not this, fear of a recession, but when you take a look at the retail sales, a lot of people are thinking it's up unexpectedly high because people are trying to get ahead of the tariffs, which makes sense. So we'll see in the next couple months what happens with retail sales, but it should follow, unfortunately, into more warning signs of a recession. So technically, mortgage bonds, are above their 100-day moving average, which if you follow the bond charts, that's a big deal. So momentum is definitely in our way. It's moving in the direction we want to go. So next week, we're going to head into it floating, thinking that rates are going to get better. But just remember, right, we're one news article, one comment from a Fed that can change the trajectory of interest rates. So I personally would not be floating in this market. If I got in a contract, I would take what I have and just be grateful. So next week, let's talk about next week real quick. All eyes will be on the housing data, durable goods, and jobless claims. Plus a Fed speaker or two are going to be commenting on the markets. These are things that move interest rates very fast on what the Feds will say about inflation, about the unemployment rate. But we're starting to take this week, especially as the Fed spoke, the more focus is going to be on this inflation number. So as we end the week, that's what we're going to be looking for. So speaking of making your housing purchase a little bit more affordable, this week, those rates that you see here, we're going to make them even more. We have a cheaper for you. We have a purchase special. You want to reach out. Let me give you a quote exactly for you. You're going to be shocked. I'm going to save you a ton of money. Let's make it more affordable for you with that. Paul O'Brant's Clear to Close Brokers. Hope you have a great weekend.